Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 11th of June, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 1.3% today to 7,755 points, retracing much of the surge last Friday. It's all about fears that interest rates will remain higher for longer, both here and in the United States. Today, the banks were lower. National Australia Bank, ANZ and Westpac were all down around 1%. So too the iron ore miners. More on that shortly. Goodman Group, Telstra, Transurban, QBE, Macquarie Group, CSL, they all fell around 1% or more. Wesfarmers was the only top 20 stock to end the day higher. The local gold miners had a bad day after the price of the precious metal dipped below $2,300 an ounce. That came after strong jobs figures, suggesting that there won't be a rate cut in the US economy for a while. West African Resources, Ramelius and Barbara, Bellevue Gold and Northern Star all dropped sharply. Story number 2, in corporate news today, AGL Energy's share price was down nearly 2% after it announced it will spend $300 million over the next 4 years after signing a partnership with OVO's Kaluza Smart Energy platform. It will also take a 20% direct stake in Kaluza. Beach Energy expects a non-cash impairment charge of up to $400 million in this year's full year results following issues at its Taranaki and Bass basins. Both will be impaired due to disappointing gas flow results. And the Foreign Investment Review Board has approved the takeover of CSR by French building materials giant Saint-Gobain. The deal is subject to shareholder approval at a scheme meeting on Wednesday. That one will pass, I'm sure. Story number 3, the iron ore miners, BHP, Fortescue Metals and Rio Tinto all fell sharply today as the commodity hit a 2-month low. As we know, Fortescue Metals Group in particular is driven by iron ore prices. And given the ore is the biggest export of BHP and Rio Tinto, it has a fair influence on their share prices. After peaking above $140 a tonne early this year, iron ore dropped to about $100 a tonne, briefly fell below that level. Then it recovered to $120 a tonne. It's now back to around $105 a tonne. It generally rises and falls on expectations about what's happening in China, whether Beijing's going to stimulate the economy or save the property market, for example. Iron ore, of course, is used in steel making, which the Chinese need. Chinese growth forecasts have been a little more upbeat recently, and that's aided the turnaround in ore prices, but sentiment has changed over the past fortnight. And then on Friday, China's state planner issued a special action plan on conserving energy and reducing carbon emissions in the steel sector. Not good news for the iron ore miners, hence their share prices were down today. Story number 4, opposition leader Peter Dutton today said the coalition won't put forward a new 2030 emissions reduction target until after the next election. He refused to say if the coalition would produce a lower 2030 target than the government, even though over the weekend he said he'd go to the next election opposing Labor's goal of decreasing carbon emissions by 43% compared to the 2005 baseline. Mr Dutton did say the Libs were committed to net zero by 2050. The fact that Mr Dutton is equivocating on targets pretty much guarantees energy policy will be an election issue in the run-up to the next poll, due in less than 12 months. And story number 5, Japanese investors have been taking advantage of the weak yen and selling offshore bonds, including Aussie bonds. In each of the last 6 months, Japanese investors have sold federal and state government bonds, according to RBC Markets. We're talking about Australian federal and state government bonds. Over the past 12 months, Japan has sold a cumulative $12 billion of Australian credit, including bonds, taking advantage of the weak yen. Now, the size of the purchases highlights how far the Japanese yen has fallen. At its COVID low, one Aussie dollar would buy around 66 yen. Now, one Aussie dollar buys around 104 yen. The yen is weak against the US dollar also. In fact, it's weak against most other major currencies. The reason is if you invest in a US government bond at the moment or an Aussie bond, you might get 4 or 5% compared to almost zero in Japan. Therefore, international investors don't want yen. That's it for the afternoon report for Tuesday, the 11th of June, 2024. Michael Thompson and I will be back tomorrow morning with the Wednesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.